Hi, everybody. Brian from Bear Bull Traders here. It's the weekend, February 25th. And of course, this is the weekend video. We'll take a look at what happened last week, and then we'll look ahead and see what we got coming up this week. Lots of more earnings and retailers on deck here to report, as well as lots of Fed officials speaking. So it should be another interesting week. So let's get down to it. And as always, let's start by looking at what happened last week here. Inflation, still a concern here, and of course we had that PCE number come out on Friday, 4.7% year over year inflation versus the 4.4 that was expected. Of course, that didn't go over well with the markets. That really just confirmed what we heard the previous week, with CPI and PPI numbers all being hotter than people had hoped. So again, people are investors, traders, getting more concerned about what the Fed's going to do and what they need to do to bring unemployment up and really start putting a dent in consumer demand here, because it was pretty robust during January and now into February. So inflation's still a big concern, and it seems like the Fed just wants to lean into the rate hikes until they get a recession. So that's weighing on people's minds. Again, you had Walmart and Home Depot that came out last week. Some big retailers had some pretty good earnings, but their 2023 guidance was pretty flat as it was. And of course, the stocks traded accordingly, while the China tensions continue to rise here, and that played on the weighing on the Chinese stocks. So again, as we finished out the week, indexes were all down in the 3% range. The strongest sector in the week was the consumer defensives, even though it was still red. It was the least red. Consumer discretionary, as you would expect in a weaker economy, that was down, with the communication services largest losing sectors there. And again, with the concern about the Fed continuing to lean into going in higher in rates, the Treasury was up, 2-year and the 10-year were both up. 10-year just pulled back from the 4% level. We'll probably see that go through 4%, I'm guessing, next week. Of course, the dollar seems to be always following these Treasury yields, and as they go up, so does the dollar. So we had a pretty significant move on the dollar last week, which of course also hurts emerging markets and the gold and silver stocks, etc. So they weighed on those indices. And of course, Bitcoin was off on the week. Seems to be trading just around or under 23,000 as of the making of this video. So again, bit of a risk asset. Things go up, Bitcoin goes up, and vice versa. And of course, before we get into looking at some charts here, I always like to do a quick plug for my book on Amazon. There it is. Profiting as an Active Trader, Guide to Trading Tools, Money Management, Rules, Strategies, and the Routines of an Active Stock, and even some options thrown in there. So if you want to check it out, there it is. So let's get down and look at some charts here. Starting with the treasuries, as always, I'd like to see what the bond markets are doing, because they are supposedly the smarter investors. And you can see here we're starting to hook up on the 2-year and 10-year as the prospect of higher rates, given the fact that inflation has not been tamed. So you can see here we're getting up close to 5% on the 2-year. And of course, the Fed has been saying they want to go to up to 5%. And you can see here we just pulled back from that 4% level on the 10-year. And I suspect we are going to break out and retest this high that was 4.25 back in October. So we'll see what happens, but interest rates look like they're definitely trending up, which is not necessarily good for the stock market for a number of reasons. One of which is actually it used to be referred to as TINA. There's no other alternative, or there's no alternative in terms of where to put your money to get a return, and now there seems to be. So you've got interest rates catching up against 5%. So, now you can get a decent return on a treasury bill. So anyway, let's take a look at what happened here. Transports, again, sort of gauge the economy. You can see took a big tumble this week. Not a bad trading day on Friday. It does seem to be finding support right where you would expect it to be support, all these areas of resistance where we broke out from and now have pulled back to. So again, volume kind of light on Friday, but well off the lows of the week. But again, we're right into an area of support here, and volume really low on the week. Of course, it was a shortened trading week, so that's to be expected. The Dow really looks like it's starting to break down here. We did pull back. We did kind of pop up by the end of the day here. But you can see here we're literally below where we started January. So the Dow is actually down on the year right now after this bit of a rousing start. And you can see here we are actually down from where we started in the month of January. And you can see here volume's been sort of dying off, but again, it looks like we're right at some moving averages here. I would not be surprised if we, it's going to be volatile. Bear markets are more up and down, and that makes them harder to trade, but I suspect we are going to lose this moving average here in the coming weeks or even days. The Qs held that 200-day moving average on the daily. You can see here, came down to it, almost touched it, went back up, finished sort of indecision candle on Friday on volume, but definitely down on the day, down to 1.33%. And you can see here we're definitely rolling over. You can see the stochastics rolling over, momentum starting to come out of the Qs as it bounced back up here. So again, definitely on the trending to the downside. SPY actually did not bad on Friday, actually closed higher than where we opened, but again below this 50. RSI again turning lower, really getting oversold on the stochastics here, so maybe we are due for a little bit of a bounce. Pretty decent volume on Friday. So I would expect a little bit of a bounce here maybe early in the week, but I still think the trend is still the friend, and it's still looking like it's going to the downside. And here's your IWM. Had a monster run since December, but again, we've broken this uptrend and now we are in a downtrend. Pretty decent volume on Friday. Again, momentum coming out of this name, but very oversold. Doesn't mean it can't stay oversold, but I expect a little bit of a bounce maybe coming a couple days. Again, on the weekly basis, you can see here we're kind of right into an area of prior resistance, which is where we broke out from, and now we've pulled back to it. Prior resistance here as well. Again, we broke out from it, pulled back. So, again, watch for possible retest of the 200-day moving average in the long run. The VIX always tends to pull back on a Friday as we go into the weekend, so it did that, but again, we're up on the week, definitely up on the week here on the fear index. The dollar, again, as I mentioned earlier, just following those yields up, you can see they're really strengthening here, and we're into an area. We may get a bit of a pause here, but if interest rates still keep going higher, I can see the dollar continuing this move here. Again, on a weekly, we really are breaking out here. We may be heading back in the long term, heading back up to this 30 level on the dollar. And you can see here we're really starting to hook back up on the stochastics, momentum indicator going through 50 on RSI. Just the dollar's looking really strong here. And Bitcoin, here we are, we're trading around just around the 23,000 level right now, but significant pullback this week from an area where we got actually over 25,000, so interesting. So a quick review of some of the stuff I'm looking at. You can see here, starting out with Apple. Apple's been an interesting trade. It got up to this 155 level, which was prior resistance here. Again, kind of a double top, and now we've sold back off. We just barely held the 200-day moving average, or maybe closed right on it or just below it. These levels aren't perfectly to the penny exact, but you can see here we did close right at the 200-day moving average on the daily. And again, I mean, I would kind of think we might bounce again. But again, I think the trend is to the downside, and maybe this 140 level, which was prior support here, and kind of an area of congestion in this area, we may be heading down to 140 here on Apple. But again, we do have put in a double, at least a top here for the time being, and I don't really see any sort of events that's going to push us back up to and above 155 at this point. Amazon's been trading horribly. We had this gap up, and ever since then it just rolled over. Kind of a head and shoulders pattern here. We got the left shoulder, the head came back down, right shoulder, and now we're right at the neckline here. And I think Amazon has more downside. And again, I think it sort of plays into the whole retail space, discretionary spending. I think if the Fed is really going to lead into the consumer, really try to take the wind out of their sails, I think the companies that are retailers are going to feel the pinch as buying, consumer buying kind of stalls or dries up a bit. Baba, I think Baba's sort of it's a combination of the strong U.S. dollar and some of the tensions that are happening with China right now. And I see nothing but bad news in this. You can see volume really starting to pick up here. And we could be coming down and testing this 85 level would be the next area of possible support. We get it pretty extended here. We probably could bounce back up to this 200-day moving average, but then I think that will be, if it does bounce there, it could be resistance. We are really oversold on stochastics and RSI, as you can see, but then you could stay that way for a long time. Dust, this is a stock I've been in for a while. You can see here as the dollar has been strengthening, the dust is just, this is an inverse ETF. Gold miners, so gold doesn't do well in a strong dollar environment. And it's a trade I've just been sticking with. Nvidia, you know, last week it was trading around 230, and it went out around 232. So really, after that big earnings report, big gap up, it looks like it's you know, we had the big volume day, 240, a lot of buying and selling, but I think Nvidia's kind of put in a temporary top here, possible to sell some calls here if you wanted to take a risky trade. So, but it does look toppy here, and I'm not sure if it's really going to come and fill this gap. Again, it's going to partly depend on the market and how much more we're going to sell off here. But looks like a temporary top has been put in on Nvidia. Tesla's really just sort of trading in this 215 to 195 range. We do have an event coming up, I understand, on March 1st that they're going to do some announcements with some new products. So this could pop the stock. I think if it does, it might actually be an opportunity to either short it or sell some calls after it pops up and then settles back down again. Tesla, we get those nice premiums on the options. But right now, Tesla's looking a little bit weak. Stochastics just sort of starting to go below 50. Momentum really coming out of this stock. So, but just be aware, March 1st could be a catalyst for a bit of a pump. Natural gas I've been watching here. I tried to take that trade here. It just continued to, you know, it consolidated. We had another big sell-off. But you can see what happened here. We had some big volume days. And these were kind of capitulation days, I think, where people just kind of gave, you know, everybody who was looking for a bottom, like myself, just kind of gave up, threw in the towel. And those were these big volume days where, you know, people did get in and got a nice bounce back. We are almost, it looks like if you draw a line down here, maybe we have broken out of a bit of a downtrend, but the bottom seems to have been put in right now. So I'd be watching for a pullback, maybe a hold of this 8 level could be an entry, possible entry for UNG. Energy's really been weak. It was a couple weeks there. It was on the weakest sector list, and you can see here it's right down at support. So it either bounces here, or if it starts to break and go through the 200-day, we've got a lot more downside there. So XLE, XLY, last talk sort of is getting a little bit long here, but again, lost this area of support on Friday. Again, this is the consumer discretionary sector is the sector that's really going to get hit here when when the Fed leans into the consumer and tries to drive up unemployment and stop consumer spending. And this is the sector that's probably going to feel it the most. I think this has a good potential for a lot more downside. Maybe a bounce back up to this 200-day would be a great area to just short that. And again, if you want to pay the Chinese stocks to the short side, Yang is always a good option. This is just a China bear ETF. And I know I traded it back up here when it was when it jumped up, and just looking at it again as a possible proxy for all the tensions that are going on between China and Russia. Okay, so let's wrap things up here. February 27th, a week ahead, we've got, there's your indexes, various levels that we're sitting at as of the Friday close, support and resistance levels. We do have a few economic events coming up this week. Consumer confidence here on Tuesday, ISM manufacturing jobless claims Thursday, and lots of Fed officials are speaking this week. Quite a lineup of during the week of Fed officials coming out, and I expect them to probably speak a little more hawkish given all the data that's come out with inflation seeming to start to move back up again. So keep an eye on that. Here's your earnings for the week. Lots of interesting ones. We've got Target and Norwegian Cruise Lines. We've got some tech companies, Blink and Plug. Some more consumer names like Target, Dollar Tree, Best Buy. Those will be interesting given the reaction we got from Walmart and Home Depot this week, and Costco, of course, on the Thursday after the close. And speaking of Thursday, if you haven't looked at it already, we are having a big meetup in San Diego. That would be starting Wednesday night. We'll be all coming in Thursday and Friday. Lots of seminars, lots of trading live, and it'll be a great event. And hopefully, some of you are watching this. Hopefully, we will see you there. And if you haven't chosen to join us yet, there is still time and there is still a few seats left. So if you want to check that out, it's on the Bear Bull Trader website. You can sign up there. And yeah, it's going to be a great event, and look forward to seeing everybody who has decided to come. Look forward to seeing everybody there and having some great discussions about trading and the markets. So anyway, have a great rest of the weekend, everyone. 8 o'clock Monday morning, we'll see you all there. Engineering the markets, and then 8:30 pre-market show as always, then trading the market open at 9:30 with our members. Ciao, everybody. Have a great rest of the weekend. Bye for now.